Wells Fargo CEO, Charlie Scharf, discusses the positive second quarter results and highlights the solid revenue growth. He also provides updates on strategic priorities, risk and control work, investments in technology, new hires, and community initiatives. The U.S. economy is performing better than expected, and Wells Fargo remains in a strong capital position. They plan to increase the third quarter dividend and have the capacity to continue repurchasing common stock. However, they anticipate potential increases in regulatory capital requirements. Wells Fargo reported a net income of $4.9 billion or $1.25 per diluted common share for the second quarter, reflecting improved performance. The CET1 ratio was 10.7% and they repurchased $4 billion in common stock. They plan to increase the dividend in the third quarter but will maintain excess capital until there is more clarity on new capital requirements. Credit quality remained strong overall, but net loan charge-offs increased, particularly in commercial real estate. Expenses grew slightly, and revenue increased due to higher interest rates. The analyst asked about Wells Fargo's thoughts on buybacks. The company stated that they repurchased $4 billion in common stock during the second quarter and plan to continue buying back shares. However, they mentioned that they will maintain excess capital until there is more clarity on new capital requirements, referring to Basel III Endgame. They did not provide specific details on the pace of future repurchases. The analysts asked for specific information regarding the average loan size in the Corporate and Investment Bank (CIB) segment of Wells Fargo's portfolio, but Mike Santomassimo stated that they do not provide that information as it can be misleading. He emphasized that what really matters are the variables affecting the property. Erica Nigerian asked about the increase in expenses and whether severance played a major role, to which Mike Santomassimo confirmed that severance was the largest contributing factor. Charlie Scharf mentioned that there is still work to be done to address regulatory issues, but did not provide specific examples or a timeline for completion. When asked about progress in implementing the consent orders, Mike Santomassimo stated that they are engaged with regulators regularly, but the final determination of whether it's done to their satisfaction comes after their holistic review. Charles Peabody asked if anything has been submitted regarding mortgage banking, but Charlie Scharf declined to comment.